Hello, chart watchers and Decision Point faithful. Welcome to this Monday, October 7th, 2019 Decision Point show with your host, Erin Swenlin, and Carl Swenlin, who is also here, my father. For those of you joining us for the first time today, welcome to the show. We do hope to have you back every Monday at 5 p.m. Eastern Time. All right, so let's go ahead and get started. First of all, I'm going to welcome my dad into the program. How are you doing today, Dad?
Doing great. I think this is maybe the last day of summer.
Oh, well, here in Redlands, I'm not so sure. Seems like it wants to hang around a little bit too long, in my opinion. Anyway, should be a great show. We're going to go ahead and look at some of those regular charts that we look at every week on the broad markets and the global markets. We'll be doing a weekly review. I'm sorry, it says monthly, but it'll be a weekly review of the broad market indexes, as well as the DecisionPoint scoreboard indexes. And we have the sentiment update, which I will let you know how people are quote unquote feeling about the market currently, and that'll give us some clues as to what to expect the market to do future. DP indicators, of course, I'll be looking at those. And then I know my dad has something new he wants to talk to you about, as well as some of his lovely grab bag charts. So let's go ahead and just dive right on in. So first up is the DecisionPoint scoreboards. And as you can see, we had quite a few signal changes last week that I noted. You've got all of the short-term signals are looking pretty ugly right now. And honestly, these intermediate-term trend model signals are somewhat tenuous right now because we are starting to see the 20 and 50-day EMAs starting to converge a bit on those daily charts. So we'll be looking at that a little more closely when we check out those charts. All right, and today we actually did get a new intermediate term trend model neutral signal on the comm services sector, XLC. That means that our 20-day EMA did fall below the 50-day EMA. While both of those were above the 200-day EMA. Had they been below it, we go to a sell. But in this case, we do like a soft sell, neutral, cash, or fully hedged. And I do know, we were talking about it before the program, Dad, but the materials sector looks like it's going to be flipping to a neutral either.
Probably tomorrow, yeah.
Tomorrow, yeah. Let's go ahead and look at some charts, though. We've got half an hour, so let's go ahead and just jump right in here. All right, so I'm going to first start off with the price relative chart, just to give everybody a feel for, relatively speaking, how the other indexes are performing against the S&P 500. And at this point, as you can see, the NASDAQ 100, the tech stocks have started to improve as far as performance, price performance to the S&P 500. This obviously doesn't mean that it's had a wonderful week. And we are starting to see the Dow underperform the S&P 500 now. And this is the one that I really don't like. And that is that the mid caps and the small caps are starting to really underperform and are heading back to those relative lows that we saw back at the end of August. Broad market indexes chart here. And I haven't totally updated this one to what you had suggested to me, Dad, but we'll go ahead and look at what I do have here. So the SPY is up here on the top. We've got equal weight down here as well. It's RSP is what we use. S&P 400, of course, 600, and the Dow, Diamond, DIA, and then QQQ, just to give you really a look at all of them put together. The main thing that I'm noticing, of course, is we're still looking at those mid caps and small caps. I think I talk about this every single week, but not even close to what we were seeing as all-time highs back when the market originally had made its all-time highs back in 2018, September, October, before the big decline there. And we're just not seeing the mid caps and small caps participating like they really should. They're really getting stuck in this trading range at this point. So we'll have to see if they can start picking it up here, but I don't know. I'm not too optimistic right now. When you look at the global market indexes here, just to give you, again, a feel for comparison to where we are in comparison to the world. And you can see that the German DAX still in a declining trend. The Canadian TSX, we did see a new all-time high printed last month. And, you know, at this point, we've got the French CAC that also printed some new all-time highs previously last month as well. And we had seen the Japanese, the Nikkei, with that break from that declining tops trend line, but it is starting to turn back over. It'll be interesting to see if it can find some, you know, some sort of support along that declining tops trend line. And you can see that the Nifty 50 has pulled back already after that breakout that we saw last month. Shanghai still looking pretty depressed. All right, let's look quickly at our scoreboard indexes. And not that much to say. We're still seeing a PMO sell signal on these charts. You can see this decline in the volume, which really kind of concerns me when I looked at the rally that we had last Friday, Thursday and Friday, and it did come on weak volume. Which I would have expected when you have a nice low like we saw back here. We start to move up quickly. You would expect to see the volume pattern look a little bit more rosy than that. And you can see the OBV is really picking that up as we see a declining trend on that. Weekly wise, you know, we're looking at these ascending wedges. I still have them on pretty much most of my weekly charts. You will find this in the DecisionPoint live chart list. Just go to the DecisionPoint blog from the articles tab, and then you can get to all these charts with all these annotations. I'm going to skip to the S&P 500. And this is what's got me a little bit concerned here is we came up Friday and tapped along this area of resistance. And today we tapped on it, and actually, you can see in the thumbnail, we got a little bit above it, but closed on the lows of the day, which is certainly not, doesn't bring much optimism, even though we might have, you know, popped up here a little bit above that resistance. At this point, you have that PMO sell signal intact. We're now starting to see, we had seen it decelerate, the momentum decelerate, but now it looks like it wants to pick back up to the downside. And again, that OBV, seeing the lack of volume coming in on those two rally days last week, I think was definitely not optimal. All right, this is the weekly chart for the S&P 500, and you can see we got a kind of a whipsaw buy that turned right back into the sell signal on the weekly chart. So momentum still looks pretty bad for the intermediate term. We did end up with a break here below a rising bottoms trend line last week, but looks like we're back up above that currently. All right, let's go ahead and move into our indicators. All right, so, you know, on Wednesday when I wrote, I was looking at these climactic readings to the downside that came in conjunction with pretty serious puncture of those lower Bollinger Bands on the VIX. And typically that's an oversold condition or a selling exhaustion is what I was pinning it to. And my thought was to look for some higher prices going into the end of the week. Amazingly, that actually worked out what I said. But now we're getting ready to probably experience what I also talked about, which is more downside action. But if you look at the VIX in the very short term, there is still some possibility to get it to rise higher, meaning that we're going to get lower readings. People are going to get more bullish as we progress if we can continue this upswing. But, you know, we're hitting this moving average on the VIX, and there's a really good chance we could see it turn back down if the market is as weak as I suspect.
Yeah, that moving average, the 20 moving average of the VIX, it does tend to be support and resistance. Just
yes. I don't know what happened there. All right. Okay, let's look at the short-term indicators. You know, they've been dancing around a little bit, but all underneath the zero line. So that's not good news. The reason I have all of these in green is because we really want to see that oscillation above the zero line. When we start seeing movement below the zero line, that's usually in a difficult part of the market trends. And we're seeing that right now. So I don't think we're quite out of the woods yet. We certainly could see these indicators move lower. We hit even lower readings back in early August. So, they've turned down so far. So I don't know, they're not inspiring confidence to me. And when you look at the intermediate term indicators, I think it seals the deal on the bearish outlook here. You've got all of these are in decline. We're now seeing that ITVM move below the zero line into negative territory. So that's also doesn't look too good right now. You can see that what looks like a double top here when you look at this longer term chart as well. All right, I'm going to go ahead and look at some sentiment indicators. And we're going to start with the put-call ratio. And I'm going to bring that down just a bit here. So I invert my scales so that you can see oversold on the bottom and overbought on the top. And you can see these indicators are hitting that oversold area right now. Now they certainly could move lower, these ratios. So I'm not going to say we're out of the woods here. But we are starting to get to that area of oversold readings where we could start to see that upswing, and that would be good for the market. So put-call ratio, it's again, you're looking at people getting more and more bearish as these readings go down. And so sentiment being contrarian, that should tell you to expect some move to the upside. All right, the American Association of Individual Investors. We'd had seen quite the decline on the bearish readings, and now we're starting to see an increase in the bearish readings, and we are well below the one reading of 1 on the ratio. So we have certainly, and you can look at the numbers, more bears than we have bulls right now. We've seen certainly lower ratios than this. But typically when you get the really low ratios, that's when you start to look for that move back up to the upside. But I don't think we're really, I don't see that. I think that things could get far more bearish among the AAII pollees. The National Association of Active Investment Managers Exposure Index, this tells us how exposed big money managers are to the market. You can see that we've been getting a pullback here on their exposure, but overall, when you look at an exposure of 57.39, it's still not what I would really call like an oversold condition. Certainly, they're cautious out there right now, but I wouldn't say overly bearish. Wall Street Sentiment Survey. We had really a nice pop on it, not for last week's reading. Last week, people came in at the beginning of the week and said that they expected the market to move lower. Looks like they did pretty good on that assessment. And we're still seeing high bearish readings, but definitely an increase in those bulls. We had nobody on the bull side last time. So the ratio was quite low. And we're still looking at ratios below 1. I mean, half of the pollees are still looking at expecting the market to close lower at the end of the week. And I was among one of those who voted that way in the poll. All right, assets analysis, and I'm going to pass it over. I was looking at it, really what I could make of this chart was that really people are kind of getting out of the market. We didn't see really an increase in the bear funds, and we saw a decrease in the equity funds, and really it looks like people are moving to the sidelines. So those neutral signals and neutral bets out there just moving to cash as they wait it out. I have to say I'm about there myself. So, all right. And the last thing I wanted to look at was gold, mainly to talk about the sentiment, the premium and discounts, really staying about the same as we've seen. Discounts means bearishness, and that's good for gold. So you want high discounts. At this point, they're pretty much, middle of the road where we've seen them. We still haven't gotten to the premium side of things for quite some time. I was looking at a possible head and shoulders pattern here, and I think, I think you could still make a case for a complex one, but really what I'm looking at this point, I think is just consolidation, probably some more trading sideways, maybe a test back up to the top of this channel. It'll be interesting to see. The PMO hasn't really hinted enough to me as to whether it's going to turn itself around at this point. So momentum's still sort of flat.
We're dipped below the neckline there.
Mm-hmm.
That was a brief fake out, and it's just typical of a head and shoulders pattern. It breaks down and then it just turns back around.
Right. So for gold bugs, that's obviously a good thing.
Yeah. So it's it could kick in again, but I'm not thinking so much of it as head and shoulders anymore.
Yeah, I'm almost on the starting to see a possible flag. It's a kind of a declining trend channel going on here, sort of a flag.
I like that. Mm-hmm.
Yeah. So we'll have to see what whether it resolves to the upside or not. But we need to see that PMO turn around. All right, I'm going to pass it back to you, Dad, and let's talk about something new.
Well, not so much new as a new way of approaching the show here. I'm not going to do the 4 unless there's something important coming up on them. I covered them adequately in the weekly wrap on Friday, and unless something big happens, I'm not going to go to the 4 unless I run out of things to talk about. Then I might go back over there, but at this point, I want to just go to the grab bag. I call it the grab bag because I basically come up with some ideas, and I have a whole lot of things I might talk about, but I never know for sure what the final is going to be until we get into the show. So it is kind of extemporaneous here. I keep showing this chart, and I keep thinking of what it's telling us. That first of all, it's everything is different. There's every period in here is different than anything we've seen before, and we are now in a period unlike anything that we have seen in this length of time. I turned 21 in 1962, and I didn't get into the market until around 1980, 81. So quite a bit of, I was completely clueless along here about the market, had no interest, and I started studying it. But all the time that I've been studying it, it's just gotten more different, and not in a good way as far as I'm concerned, because the interest rates this low are just nuts. So I do have a new chart on the earnings analysis of the S&P finalized second quarter of this year, and we've got it on the chart. The chart, just for the newcomers, shows the range of where the S&P would be if it were overbought, and overvalued and undervalued, and in the middle band is fair value. So right now we can see it's not only overvalued, it is extremely overvalued. The only bright spot you can say is these hash marks here show us where the bands will be projected to be at the second quarter of 2020. So if you look at projected earnings, which are not guaranteed, it's in the range, but it's still overvalued. looking at a long-term chart, you can see that we haven't been undervalued since 1984. That's just pretty crazy to me. But no telling when we're going to get back there, but we will. One of these days we will. Okay, these are the short-term charts. You've looked at those, Erin, but this is something I'm suggesting a change is to put not only the Swindler trading oscillators on there, but I'm also putting stocks above their 20 EMA and then percent of the PMO rising. And I think as I had them together for not too long, but I noticed that it's really helpful. Like in this condition here, these two tend to be faster than the top two, but in this case, you could see strength draining out in both breadth and volume, and finally it hit, and the others caught up with it. But now the percent PMO rising, percent above 20 AMA, those tend to get oversold more easily and quickly. So whereas right here we were kind of unsure what was going on. It was oversold a little bit, but it wasn't much. But these, especially the percent PMO rising, those were they got very oversold and gave us a chance for a bottom, which we did. Incidentally, I'm not. I still think we're going on the double top theory of the market, and I think we'll be breaking back down. It looks like now. That was a nice reversal today. But do you see what I'm talking about here, Erin? We've got like in this case here, we've got strength draining out above the price top, but all four of them were going that way. Same here, but here we didn't get that kind of drain off, but we actually, this gave us a clue because this dropped off rather quickly.
Yeah, it's hard to support a rally when you have stocks that are slowly losing steam, moving below their 20-day EMAs, and their PMOs have turned down, so maybe they are on the buy signal. But when you start seeing those kinds of divergences, that definitely should give you pause.
Yeah, the STOs too. This is different. I mean, the STOs run off with a formula, so. And they're not as direct reading as the stocks above their 20 EMA percent PMOs rising. These are pretty direct readings off of the chart, and more, say, was less arcane, more easily understood, and I'm really liking that. Okay, here we have the Golden Cross and the Silver Cross indexes. Note that we have a negative divergence going across here and a negative divergence on the Golden Cross. Silver Cross being percent of stocks above their 50, the 20 is above the 50. The Golden Cross is the 50 is above the 200. And I've been experimenting, putting, here we go again with the percent above the 20 EMA, trying to look at different time frames and just a different angle, and finding it helpful to watch. Like, again, here we have the negative divergence here going into this top. This is the BPI, bullish percent index, which is the percent of stocks within the index that are on point and figure buy signals. It's not as easy to understand what a point and figure buy signal is. I'm not a P&F man, but I have read it and it's pretty straightforward. And I've looked at the charts. I just don't follow it that way. I think it's easier for people to understand EMA crossovers rather than what a point and figure chart looks like. But in case of the BPI, StockCharts has a way deep history on this indicator, and so it's as useful. If I had to get rid of the Silver Cross index, this is just as useful. I just like the Silver Cross because it tends to be a little smoother, has a little wider range, and of course it was invented here.
That's right.
But notice we've got really a negative divergence across here. We've got it, and again, the negative divergence going into these three tops. Same thing going for the NASDAQ composite, and that's got a long history of negative divergences, almost going on 2 years now. This is not good. The market, I've seen it before, the market can sustain on, say, 50% of stocks being on buy signals. And that's still not a healthy situation. So it's not one of those where you kick back and start vaping.
Yeah.
Again, here's the New York Stock Exchange composite. The same problem of negative divergences running across here. I mean, let's face it, this is pretty extreme. This up here was at what is that, around 70, and over here we're at right now about 45. Pretty bad. These are our intermediate term indicators, and you've covered these, but I put in the Silver Cross Index as one of the ones we ought to be looking at now with this. Note we have divergences here. These are reverse divergences. They are bearish. We have negative divergences here. They are bearish. How are we doing on time,
Erin? We have about 1 minute.
Okay. Let's take a look at what happened today. I wanted to point out fading volume. We got the 250 EMA of S&P total volume, and notice how it's been fading across the last 3 trading sessions.
Right when we've been rising and rallying, huh?
Right.
All right. Well, excellent charts. We're kind of shaking things up a little bit. I'm going to grab the screen really quickly as I say goodbye. I just wanted to remind everybody to go to the DecisionPoint blog. There's where you can get to the live chart list. There is Carl's weekly wrap that he wrote last Friday that'll give you all the rundown on those big 4. And check out the new DecisionPoint Daily Diamonds that I've started doing. I think you might find those interesting. Thanks, everyone, for joining us today. Please do come back next week, Monday, at 5 p.m. Eastern, and have a great day and happy trading.